Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me in this weekend market update. It has been another tremendously favorable week's worth of trade. If you pay attention to the top right-hand corner of my screen, the Dow Jones Industrial Average closing up just over 500 points. This has been the second consecutive week where we have seen 500 point plus gains in the Dow Jones Industrial Average. It was the first week of the calendar year 2018 where we closed up 576 points. So we have had a very quick start to the calendar year of 2018. It is the fastest pace beginning, I believe, in just over 32 years, just to put this in perspective. And because of that, and naturally so, we have placed a bunch of very profitable trades, not only in our top 12 individual trade list, but also when it comes to directional plays in the overall market indices themselves. Take, for instance, the industrial average. If you just consider 24,909 was pretty much where we were as at the second calendar day of 2018. Here we are at 25,803. So we have more or less moved over 1,000 points since the most recent entry, the contingent order to jump into the diamonds. The same is true, of course, for the S&P 500 most recently and the NASDAQ. But what is also relatively interesting as well is that when we start looking back on some of the past trades that a lot of people are still accumulating and holding on to, I mean, the real breakout really materialized as far back as October, the beginning of October, where the industrial average broke out above 22,444. So the diamonds, for a lot of people, they are just simply holding on to them. They've got enough time decay, or at least the option contract expiration is pushed out far enough so that they can simply hold on to this and just allow, of course, those gains to continue to snowball as we continue to push higher and higher and higher. My personal target, just to share with you, on the industrial average is sitting at 26,309. When the industrial average gets to this point, okay, that is when I will begin closing out of the diamonds and begin closing out of a lot of individual companies or a lot of individual trades that we find ourselves still holding on to at this particular time. It's anyone's guess as to when we hit 26,309. An interesting little fact for you right now is that over the past 5 days worth of trade, we closed up just over 500 points. So again, this is the industrial average, 507 points. The difference between where we closed at on Friday, 25,803, and where my target is 26,309 is more or less 500 points as well. So we might actually hit it in the week's upcoming worth of trade. Now, outside of this, we've had, again, a plethora of really favorable trades. Let me just recap some of them, which we've entered into for the calendar year 2018, if not in the month of December, which have more or less been closed out at the current junction. Netflix, for instance, the entry 199.87. We hit our target at 215.20 on Thursday. There are still people in this trade as high as 221, but we need to liquidate this trade prior to earnings, which is scheduled for Monday, the 22nd of January. If we go through the list as well, we've been in IBM since 158.04. Our first target was 160.42. Our second target is 165.59. Our stop on the trade is now placed at 163.03. The reason why it is so tight is because, again, we have earnings which is scheduled this coming week, Thursday, the 18th of January. If we continue into Google, breakout entry at 1,070. This was the first trading session of 2018. A secondary entry above the swing high, which actually triggered on Wednesday the 3rd. And now we are currently printing at 1,130. So we have made $60 of intrinsic value since this entry over here on the 1st of January as to where we closed yesterday. So a tremendous trade here. Our stop on the trade, 1,102. Earnings, again, is scheduled for the 2nd of February. It does have a little bit more time to run, but at the same time, at least we can lock in some pretty decent trades there on Google. Here's the picture of CVX. For CVX, I'm not going to begin in the month of January. Really, the action began at the midpoint of December. We had entries at 120.97, 121.60, 122.36. These were all bullish breakout entries. A lot of people jumped into CVX and they've simply held through Christmas, the New Year, and are still holding on to this up here at 133.60. This is a tremendously profitable trade on CVX. Our stop, which we've just adjusted over the weekend in Pro, That Pro class is now up online at the website, has been moved up to 131.98. Earnings is at the beginning of February. I've got the date to be February the 2nd. This may change, but again, this is all profit, which is locked in up until about 131.98. We can still move higher if that happens, so be it. That would be ideally the right outcome for everyone, but at the same time, we're very happy about that individual trade. COP, we started getting interested in this over here at the beginning of November. 52.60, we pulled on back down. We re-entered or added at 51.23. We hit our target at 54. We've re-added at 55.98, 54.70, 56.90, 57.30. Our stop on the trade is now moved up to the low of Friday, $59.12. Earnings is scheduled for the 1st of February. So a little bit more time to hold on to this if it chooses to run. At the same time, we'll be happy to be stopped out for a profit at 59.12, a very decent profit as well. Caterpillar is a stock that personally I'm not in. It is trading up at 170.30, but if you go back retrospectively and if you look at all of our bullish entries on this, you have to go back to as far as July at 108.97, even as low as about $100 per share, to really take advantage of what has been a tremendously profitable trade. I mean, if I go back to this instance just here in August and September, we really started to be jumping in or jumped into a lot of positions at 115.33, 116.77, 116.02. These trade entries, I don't move, I don't touch. I'm just trying to move them away from one another so you can differentiate between the numbers. 119.14, 119.65, 126.13. During this, we have gone into consolidations, but during the month of December alone, we entered at 140.80, 143.53. I did not re-enter at 145.64, and we hit our target at 158.39. I was expecting Caterpillar to more or less slow down for the month of January. It hasn't done so. It's rallied. But for the people who are still holding Caterpillar, congratulations. Their stop is up at 168.95. Tremendously profitable trade on Caterpillar, along with a lot of these other individual stocks. Now, as I look up through the list, I'm still going to recap Baidu, Boeing Airlines, but Amazon personally has just been something which is really quite amazing. 1,206 was the entry. This actually triggered on Thursday, the 4th of January. Now, why is this so important, or why is this so interesting? Because as at the close on Friday, we've moved $100. We've priced in $100 of intrinsic value into those call option contracts on Amazon. And this is in the space of, 7 days worth of trading. 7 sessions of trade. And we've added $100 of, intrinsic value into the price of those call option contracts. If anyone who is familiar with derivatives, with options, how they are priced, especially in the money options, and when you start factoring in the delta calculation of $100 further into the money, we can call a delta of say 90, even though it's higher than that. That's $90, which has been added to the original option prices that we originally enacted at 1,206. Anyone who's familiar with options can understand that this is pretty much this one trade right here in the space of 7 days, going $100 further into the money, has pretty much produced significant returns that a lot of people would be happy with over the space of 1 year. And this is obviously breaking down a portion of one's capital account, obeying capital accounts, money management rules, but the actual return on this has pretty much, for a lot of people, finished their 2018, although obviously they're not going to stop trading for 2018. If anyone said, hey, I'll offer you this X% guaranteed now, a lot of people would actually take that. We've got Boeing Airlines as well breaking out above 301, but the actual trade that I was in, 267, 279, hit our target at 300. A lot of people have moved their stop up to 329. Pretty decent trade there as well. And to conclude with, we have Apple, which is on the precipice of breaking out now. However, we've got earnings, which is still scheduled, which is sort of throwing a hammer in the works where we may not actually be able to take advantage of this. Personally, I told people again over the weekend that I won't be taking this. The reason for that is because we've really only got 2.5 weeks to actually be able to hold on to Apple prior to actually being forced to liquidate it. So for me, it's not enough time. But that's just to recap again a lot of these trades that we've been in for 2017. If you have any questions, please email me, success@pivotpoint-trading.com. But it has been a really tremendous start to 2018. Enjoy your week, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.